Everyone, this is Kirk here again at Option Alpha. It is Saturday, the 9th of April, and I'm sure you guys have already heard that the late night deal that was struck to keep the government open. So it seems like everything's going to be a little bit more hunky dory on Monday for stocks. I know that was a big pressure that stocks and equities had going into the close on Friday, just not really knowing what was going to happen. So at least the extension for now is going to be good for equities. And then obviously, of course, we have earnings that start next week and options expiration. So we have a lot of things that are coming together next week. So I wanted to go over this chart and a couple other charts as the weekend video here, just to kind of get everyone back on track. Now, the chart that we're looking at right here, this is a chart of the SPX on an intraday for the last 60 days. So what I wanted to do, and you can see there's two major zones here in green, and I'll just go back in time just a little bit to kind of highlight why I have green zones here instead of support resistance lines. Now, lines are obviously really good, of course, if you have the daily charts and stuff, but on an intraday chart, the lines are really kind of, I wouldn't say worthless, but they just give you a line in the sand. And what most traders do when they trade support and resistance lines is just look at the actual line, and instead you should really be looking at a resistance zone. So not a huge zone, but just an area of resistance, like an area of resistance here or an area of support. And so you can see that over the last month or two, these two major areas right above 1305 and then right at 1330 on the S&P have been really good zones of support and resistance. So again, not a direct line in the sand, but generally speaking, these areas have held out as pretty good. You can see that it bounced in between these two areas before in March. Once it broke out lower, it came back up and retraced and hit that area again as resistance that was acting as support before. So now we've kind of come back full circle almost. And again, you can see the same areas are working again, acting as support and resistance. And really the area I want to focus in on here is just over the last three, I guess, weeks here, really. And that's after it bounced off these lows here the end of March. Again, came into an area of resistance around 1330. And then all pretty much last week and the week before, it was trading above this range. Now, again, you can see it kind of bounced off of this range and was really choppy all week. But on Friday, it actually closed down below that range and now has come back up and is hitting that as a retracement level. So based on these technicals, it really looks like the markets could trade lower based on this retracement. Now, if it does trade lower based on the retracement, obviously the next major area of support is going to come in around right about 1305, just above here. Now we're going to see a little bit of support at about 1318 or so as the market moves down, so maybe a slight bounce there. But if the market does stay underneath this 1330 zone, then I would guess that we're going to be heading towards 1305. Now, obviously, the big risk next week with earnings is that everything goes really well, in which case we're going to have a little bit of trouble getting past around 1338. That's really where the market has kind of seen most of its trouble, in this 1338 region. So if the S&P does start to trade higher on Monday and Tuesday, then look for some resistance at 1338. And obviously, we want to see it get clearly past there before we get more bullish on the indexes. Okay, now the other things I wanted to take a look at here tonight are a couple charts. The first is a chart of crude. And I'm actually going to go back for the last 5 years on crude here. Crude oil has been really interesting. And if you haven't been following it, obviously you kind of are missing out on just a really good turnaround that it's had. Speaking of the charts, in 2008, we were all the way up at near 150. Then at the end of 2008, we were all the way down just right above 35. So a pretty big spread. But I don't think what most people understand is that we've captured and recaptured a good deal of that spread back to where we are right now. And actually, crude closed at, I think, 112. So this chart is just a little bit old. They haven't updated their chart. It closed actually near 112. So I think it's pretty interesting where crude has been. It's come a long way, and I don't think that these price levels are going to keep this market turning higher. Obviously, demand is one thing, but these prices are also going to start to affect a lot of other things. The thing about crude that's really interesting, I've thought over the last couple of years and months, has been that it's been trading in these very distinct channels, and it seems like once it jumps a channel, it trades in that channel for another couple months, and you can see it traded in this channel in 2009 and really most of 2010, this kind of channel that we've drawn here. Then once it jumped below this level, now it created this new channel that it's been trading in until recently, and it's kind of propped back up again underneath and or on top of this channel here. I think what's really interesting is that if we do see a significant break above this new channel, or this old channel that is now new, then we're going to go back up into this area here, which is going to act as resistance. So the area that I have that's converging around everything, it seems like, is right around 120 on the charts here. So right up here in this blue bubble that I've already drawn on my chart, right around 120 seems like where everything is converging for crude oil. So it's going to be interesting to see how it plays out. I think that if we do ever get up there, and if we do get up there in a hurry, namely in May or April and in the beginning of May, then I think we could see a really good pullback back down to 110, 115 for sure. But I think that right now the path of least resistance for crude oil is going to be up. So you want to adjust yourselves accordingly. As we look at crude, I know that I had asked this on our Facebook page, what was the best way to trade it? And a lot of people said USO, and I don't disagree. I think that the USO is a good way to trade it. I don't think it's had quite the rebound as generally crude has, but you can start to see it's breaking out. I know we've covered this a lot here. Again, you can see another area of support resistance that we talked about in another video before about USO coming back down and bouncing off this area after the breakout. Now you can see we have another breakout higher. So it's going to be likely that as USO starts to roll over here in the next coming weeks, if it does, that we're going to see, again, another bounce off of this support resistance level before continuing higher. So these things don't always just shoot and continue just straight up. They do come back down and have a tendency to retrace these levels before going back higher. And you can see that's exactly what happened back on in March here with USO. Once it broke out, moved higher, then came back down and bounced off of this support resistance level. So that's what you really want to look out for in the coming weeks and days. Obviously, the big thing that I think that's driving most of the market, whether you're in crude or equities or whatever, is the dollar. The dollar just continues to fall, again, breaking below some major support levels. So we don't really know how far this is going to go, but it's obviously not helping. At least for equities, it's keeping them propped up. And then for crude, it also affects crude trading as well. The dollar just continuing to fall last week. So we could start to see this accelerate, in which case equities would obviously get a boost. But who knows if we might get any sort of near-term support in the dollar, which of course would send equities lower, at least short-term. So as always, I hope you guys enjoyed this trading video.